Hey guys, welcome to Little Panda Forex. So in today's video we're going to be doing something that we haven't done on the channel before, and it's going to be how to trade like the banks. And the reason we're doing this is because it's the banks that move the market. It's not retail, it's not hedge funds, it's not even billionaires. It's only the banks that move the market. And to put things into perspective, in order to move gold by 1 pip, okay, you need a 10,000 lot size position. So just think about this. In order to just move gold, which is one of the biggest market out there with a lot of money, you need 10,000 lot size to just move it by 1 pip. So there's no way that retail or hedge funds, anyone else but the banks can move it. So that's why we're going to learn how they trade, how they look at the market, so we can try to be on the same team as them, and that's where you make a lot of money. Comment below your trading style. Oops, don't even know how to spell trading style. Scalping, day trading, or swing trading. And most importantly, why? So yeah, comment that. Myself, I'm more of a day trading when I'm using the 1 minute strategy, and when I'm using other strategies, it's more of a swing trading. It's just been working good for me in the past, so yeah, that's that. And let's get started with the video. Okay, so how to trade like the banks. If you want to trade like the banks, you need to think like them. And banks, they have levels. These are like very important levels on the market, something like this. And the way we identify this is when price came here before, it dropped at least 4 candles. And I'm talking about bear candles on the daily time frame if we're interested on a sell. And what happens is when market goes back up to this level and it comes within our zone, what we try to do is enter a sell position by going into the smaller time frame and looking for something called BOS, and it stands for break of structure. So once we find the levels where the money is there, where the banks is likely to enter a big position, we want to be on that ride to the downside. So we go to this level, we mark our zones on the daily time frame as long as it meets these requirements. So we need to have at least 1, 2, 3, 4 candles in the same direction where we can consider this as a level. And then we go to that level, and as price reaches that level, we go into the 1 hour time frame and we're going to be looking for break of structure. And once we got that, we enter our sell position. We put our stop loss just above the recent high. If you don't know what the recent high is, there's a little indicator I'm going to show you that I use. And yeah, it's pretty much simple. If you find a level that has 1, 2, but not 3 or 4 candles, then avoid it because it's not strong enough. Or if there's 3 candles, still avoid it. But something else that you can consider is if there is a bear candle, and then a small bullish candle, and another bear candle, that's still good. So this is Euro USD, and remember that the banks mostly trade the major pairs. Let me just show you major pairs in Forex. So Euro USD, USD JPY, GBP USD, and USD CHF. These are the 4 major ones that the banks use to trade. Obviously there's other ones like gold and stuff, but I would stick to these 4 because you just need 1 pair realistically to make a lot of money. So yeah, less headache, more money. I like it. And this level is good because let me just show you. So we got 1, 2, 3, 4. So I like that. So now we're on the daily time frame. I'm going to go and draw my zones. And the zones you need to draw from the wicks. So something like this. Okay? Or you can do like that or like that. Doesn't really matter. Price came here very close. It dropped. We're not interested. Now it's here. Let's move it by 1 more candle. Okay. Remember guys. So what can we see here? Very simple stuff. we can see that we have structure here. Okay, this was structure and here was structure. Simple. So now we need price to break this structure, come back, do a retest, and we would be interested in a sell. Alright, so here we had a really nice break of structure. Now we need a retest. There we go. So this one didn't really count because we didn't get retest below this level, so we don't consider that. That's more of like a fake out. But you see this one, it was a very strong bearish momentum. So we broke below the zone and we went back, do a retest, and we had a bearish engulfing candle. And what we're gonna do, we're gonna enter a short position. Okay, and you're gonna put your stop loss just above the recent high, which is this. And if you don't know, you can use this indicator. Let me just show you. It's called Pivot HL, and this is on TradingView, by the way. And let me just turn it on. So you see, so you want to put your stop loss just a few pips above that recent high, and then we have to go on the daily time frame to see where we're gonna target, basically. Okay, so now we are on the daily time frame. Let's mark this zone over here, this low here, and when price comes to here, this oops, sorry, when price comes to here, down here, is because of, well, this is where the drop happened. We're gonna put TP1, okay, and here is our final TP. So this is a 7.51 RR, and I'm gonna be playing it and see what happens. This is why it's important that you don't move your stop loss too early. So if you stopped it, you would have been stopped basically at break even. Alright, here we would have closed maybe 50% of our position and move our stop loss to break even. Now let's see. Perfect, look at that, beautiful. And then let's see what happened after this. Ooh, it went even more, but obviously we don't know if it's going to go that low. What you could have done, if you have the patience, of course, let me just put this here. You could have put this, you swing here, so here would have been your TP1, TP2, TP3. That's another way, but we don't want to be too greedy, because you know we don't want to get stopped out. And that's how you do a sell. So it was very simple. You guys saw how we drew the daily zones. Then we went for 1 hour break of structure, and we used the pivots. See, and another thing that you do want to see is here we entered. So here we was bullish, so we're on higher high, higher low, higher high, higher low, and then what happened here? We broke structure. So now let me remove this. So now we lower low, lower high, lower low, lower high, lower low. Probably is going to go there and then probably down. Let's see. Oh, so there it broke structure, so again we became bullish. So it's as simple as this, guys. You don't need to overcomplicate it. Obviously this does require a lot of time, so you need to be really patient for the price to come to the zones. So meanwhile you can do some other strategies that you have, some scalping or whatever, but this is how you catch really good moves with a high reliability. And this is how the banks trade. They focus on the big time frame. They don't do anything small, because for them it's just not worth it. So yeah, that's that. If you want me to do a similar thing on the buy, comment down below, say you want a buy version. I'll do it in the next video, because it's kind of long. I have some other stuff I want to show it to you. Another thing that you can use to your advantage is something called retail sentiment, and this is showing where retail, what is retail basically doing in the market. And if you're here and the trade, this one, it looks like a nice sell, but you look like a lot of the retail market is buying, that's a really good sign, because you want to do opposite of them. Okay, and I'm going to use this website. So this website, I'll leave the link in the description. It's my FX book, and it's the retail sentiment. So let's say we were doing euro dollar, for instance, which we did. So as you can see here, retail, 79% of retail are shorting this pair and 29% is buy. So if your strategy says that you should be selling, then ideally you want to avoid it, because you go in the same thing as retail, and the banks tend to move it up. Obviously you should backtest it to see if this works well. If it doesn't, don't use it. And another thing that you can use is news. So investing.com, and you're going to go to the economic calendar. I'll leave the link in the description again. You want to go to filter, go towards the bottom, click on this 3-star. It just shows how important it is. This is high impact, and click apply. And this basically shows you when there is news. So you can see it for tomorrow, this week, next week, and it will tell you what pair is happening. If you see that there's news coming, like maybe in the next hour, 30 minutes, you want to avoid trading, because news does have a lot of volatility. It adds a lot of volatility to the market, and it can mess up your technical. So it's best to wait. Thank you for watching, guys, and I'll see you guys next time. Peace.